This video is a breakdown of the capital gains tax, and that's when you're taxed on things like stocks, bonds, real estate, or cryptocurrency. And we're going to learn how much the government takes out of those gains. So the definition I'm going to give of a capital gains tax is the tax the government takes from realized profits on financial assets. And the key here is the word realized, and we're going to go over that here. So there's two types of gains: realized gains and unrealized gains. So realized gains are gains that you have made on assets that you have actually sold. So you've actually sold and profited on those assets. Unrealized gains are gains that you have made on assets that you have not yet sold. So you're still holding those assets. So just think realized, you've sold; unrealized, you are still holding on to those. So let's take a look at a few examples here. So let's say Katie bought 100 shares of Apple in 2013 at $19.03 per share. And then let's fast forward 10 years later. Say she sold all 100 shares for $171.28 per share. And that's going to be $15,225 in realized profits. Let's look at another example. Let's look at David over here. And let's say David bought 100 shares of Amazon in 2017 at $56.49 per share. Fast forward to today in 2024. Now each share is worth $174.48. However, he has not sold these shares. He's just holding on to them. So because of that, there is no profits to be taxed on. The gains are currently unrealized gains. And so make this note, most important note of the video: you are only taxed on realized gains. You cannot be taxed until you actually sell your assets and profit off them. And when you do sell, how much do you pay? So let's go over that right now. So you're either going to pay 0%, 15%, or 20% all of profits. And that's when you are selling assets held longer than 1 year. So any asset that you've held and then sold after a longer time period of 1 year, you're going to pay 0, 15, or 20%. And it's going to be based on your taxable income level. So here is the tax brackets rates for long-term capital gains tax. And again, long-term means assets held for over 1 year. So if you file as single and you made less than this amount here, you're going to pay 0%. Same for head of household, made less than that amount, you'll pay 0% on capital gains. And if you married filing jointly, you're going to pay 0% if you made less than that amount here. Married filing separately, you're going to pay 0% if you made less than that amount there for your income for the year. So most people will probably pay in the 15% range on their capital gains tax. So if you're single and you made from this range to here, and again, it's a huge range. So notice it goes to $492,000. Same for head of household, it goes up to $523,000. Married filing jointly goes up to $553,000, and then married filing separately to $276,000. So you have to make a ton of money in your income per year to be taxed at that 20% bracket over here. So if you're single, you have to make over that amount to be taxed at 20% on capital gains. Head of household, same. Married filing jointly, same. So you got to be over that amount there to be taxed at the 20% rate for your capital gain. So let's go back to that example of Katie, and let's see how much tax she's going to pay on that $15,225 in realized profit. So Katie filed as the head of household, made $67,000 of taxable income. So how much capital gains is she going to pay on those Apple stock profits? So let's go back and look at all those brackets. And again, she filed as head of household, and she fell into this range right here. $67,000 will fall in between that range. And so that means she's going to pay 15% capital gains tax. So now let's calculate that. So $15,225 in realized profits, and you're just going to times that by 15%. And that means she's going to pay $2,283 in capital gains tax. Let's do one more example. Let's look at Jordan here. Let's say Jordan bought 200 shares of the Invesco QQQ in 2021 and then sold those shares at that price there in December 2023. So it's over 1 year holding, and that's $20,482 in realized profits there. And so let's look at Jordan, see how much he'll pay on those. So let's say Jordan had a huge year. He filed as single and made $585,000 of taxable income in 2023. How much capital gains tax will he pay on those $20,482 in profits? So let's go back to the chart here. So he filed as single and he made $585,000 for the year. So that's going to fall into that 20% range here. So now let's just go back and make that calculation. So again, you're just going to tax the realized profit. So that's going to be $20,482, and then multiply that by the tax rate of 20%. So that means Jordan's going to end up paying $4,096.40 in capital gains tax. So before you go, one last thing is, what about short-term profits that are sold less than 1 year after purchase? So short-term gains are actually taxed at the same rate as normal federal income brackets. And because of that, you end up having to pay no matter what. So there's the income brackets, and you're not taxed as the long-term gains are based off your income for the year, but how much profits you made on your capital gains. So if you made between 0 and 11,600 in 2024 in profits, you'll pay 10%, and so on down the line. And the reason for this is that this actually incentivizes long-term holding. The government wants to incentivize people holding long-term assets versus short-term trading, because you end up having to pay less tax in the long-term holdings. So that is a breakdown of capital gains tax. Hope this video helped.